Let me now bring on board Gautam Trivedi, Managing Director and Head of Equities with Religare India. Gautam, morning. Thank you for joining us. Gautam, what would you attribute this month's price damage to? Global sell-off or poor macros and poor earnings visibility?
I think it's a combination of both, but I think the fact is that the overall investor appetite for India, and in particular for emerging markets, which is very strong for the first 3 months of this year, over the past about 15 to 20 days, and I think more so since the mid-cap sell-off started, has significantly waned. So I think we've seen in general, even though I think India still stands out among the BRICS, the 4 BRICS nations, as far as investor appetite is concerned, the overall investor appetite for BRICS in general, I think, has started to decline. The other, of course, darling of the global markets has been Japan this year. So you've seen a lot of focus, especially from the FI clients, shifting gradually to Japan. And as a function of that, you've seen the Japanese markets up as much as 11% in dollar terms, but 27% in local currency terms. It's attracted almost $40 billion in the first quarter itself of this calendar year, which is up 100% year on year. So I think a lot of focus has shifted there, and obviously that's been the root cause of why the Indian market in particular has started to decline. The other, of course, expectation is probably the worst quarter in terms of earnings. So I think that it's a combination of both factors, really.
Gautam, the market has lost nearly 10% from its recent peak of 6,000 odd to now 5,500 odd, where we are standing right now. How much more downside do you see on the market, purely based on the facts that you were just talking about as to how money is moving out of emerging markets like India and being deployed either to the developed world or then markets like Japan?
Yeah, I think this market could easily go down another 10% from where we are right now. I mean, if you look at the put and call strikes currently, they're at about 5,400 on the put side and about 5,700 on the call side. So really not that much upside from these levels, and I think definitely more downside. So yeah, I think that I would budget anywhere from 8 to 10%, potentially more to correct from here.
Do you worry about quality stocks now? Because the popular trade for last 2 quarters has been foreign institutional investors have been investing in Indian equities, but they've only bought quality stocks. If one works with the assumption that in the near term liquidity will reverse, do you think the quality premium will also come down?
Yes, I think that is clearly a risk, because in the past month and a half or so, we've seen, as we all know, the usual 4 names, 4 FIs that have been accumulating only the quality names. So I think that could be at risk, but if they were to sell, that is, of course. But I think the 4 names that we all know who they are longer term investors. So I don't see them anytime now selling. The ETF selling, of course, is a bigger concern. So I'm ignoring for the minute the 4 to 5 big FIs, mostly US-based investors who've been buying the quality names. But ETF selling, of course, is beyond understanding in terms of when they could actually come and sell. But the fact is, some of the quality names could be at risk. But having said that, I think there are certain quality names, like let's say an HDFC Bank. It's not very often in the history of that bank that you actually get opportunities to buy. And I think given the fact that stocks corrected almost 10%, now would be a good time to start accumulating. I would not necessarily say buy all of your decided quantity, but now is a good time to start looking at the stock.
Gautam, a quarter ago, the popular trade on D Street was to sell defensives and revisit industrials and beaten down high beta names. Do you think that trade has reversed, and now investors, they should revisit defensives?
I think the market is not really looking at that way. I think there is well, I don't know if you want to call IT defensive, but the fact is there has been some shift. I don't mean a tremendous shift, but there has been a shift away from domestic consumption themes. So having said that, if you look at pharma, it's still very much a domestic consumption theme. And that's one sector where I believe that it's a great way to play the domestic consumption theme at a significant discount to the FMCG players. So I mean, we're looking at anywhere from a 25 to 30, in some cases 35% discount to the levers and ITCs, and you've got stocks like Ranbaxy trading at 12 to 13 times. You've got Cadila, Lupin, Cipla at 18 to 19 times. So I think these stocks are very attractive. But I think to answer your question, there has been a shift away from the domestic demand. So FMCGs clearly are not in favor right now. But and I think among the defensive, if you can call IT defensive right now, a place to hide, given that it's not so much domestic demand. So I think there's, so getting back to what I was saying, I think domestic demand shift away from that is what I see, not so much into defensives.
So Gautam, are you confident that come Friday onwards, when Infy comes out with its earnings, the optimism around the stock prices will actually, be evident in the kind of quarterly performance that we'll see from these names as well?
I think so. I think there is optimism built around the IT names. It's not a very strong. I mean, people are not expecting a significant rebound. But I think from a 9 to 12 month view, IT is really a place where we've seen most of our investors at least come in and accumulate. In fact, one stock that we like in that space a lot is Satyam/Tech Mahindra. So we continue to recommend that name.
Behind that recommendation, because if I map the 4 or 5 large IT companies, Mahindra, Satyam or Tech Mahindra, both these stocks have appreciated by a good solid 80%. Do you still think that the margin of safety is supportive for a Mahindra, Satyam or Tech Mahindra?
Yes, I do, because if you look at the discount, I mean, the stock is still trading at around 10 times forward earnings, and it's still trading at a 30 to 40% discount. I think the stock had a mild correction for 2 reasons. One, there was some confusion as to why Mr. Gurnani sold the stock, which I think has been since clarified, so it's not that big a deal anymore. The second reason, of course, was the fact that the merger, the amalgamation by the High Court has gotten delayed by another 6 weeks. So I think there has been a mild correction, but that's really it. I think we still continue to like the stock, and the combined entity would be a stock we would advise investors to own.
What do you make of the Wipro demerger? Do you think in the near term Wipro demerger will create shareholder value because the management now will only focus on the core business?
Yes, I think it will. I think at the end of the day, investors in general are looking for pure plays, and I think not that the FMCG business within Wipro, or the non-IT business, should I say, was a big contributor in the first place. But I think yes, this would be an interesting move by the company.
What have you made, Gautam, of the oil and gas space, considering the amount of reforms that we've seen have only been in that sector? And of course, there are names like a Cairn as well, a new discovery just this morning. And there is a whole lot of buzz in the market about M&A activity as well picking up, and perhaps that Vedanta may be preparing now for a Cairn PLC buyout.
Yeah, I think Cairn has been a disappointment. It's a great story. We've had a buy on the stock for the longest time, as has most of the street. But it's unfortunate the stock really hasn't done much. I think there has been the overhang of the PLC stake sale. But if this is indeed true about Vedanta trying to acquire Cairn PLC, then I guess to some extent it does remove the overhang. And plus, I think the positive news flow should be probably a good time to look at the stock. So we actually do like Cairn. The one interesting stock which which I think a lot of people had sort of forgotten and didn't realize myself that it had actually now become a mid-cap stock was actually HPCL. So that's an interesting name as well. The stock is down almost 22% from its peak earlier this year, and at about 280, 290, the stock is pretty attractively valued. It's at 0.7 times book, and trades at just under 10 times FY14 earnings. So I think that's another name to look at from a valuation perspective, and given the fact the reform that we're seeing on the diesel deregulation as well.
What are your thoughts on autos? Is it a good time to put money to work into autos? Most of the auto stocks are down a good solid 10 to 15% from the recent highs. Auto structurally is a cyclical business. Currently the cycle is bad, but one day the cycle will eventually reverse.
Yeah, I agree. One day everything will reverse for the market. But I think, two-wheelers, we are still not very comfortable. And I think there's potentially weakness in those names. I think clearly Honda has done a fantastic job of gaining market share. And obviously their India CEO has been in the press recently saying that they're potentially preponing their plans to become number one by a couple of years to end of 2015, which I think is obviously ambitious, and I assume that he's got some theory around it as to why they'll get there that soon. But so I think two-wheelers we are really not excited about. Ashok Leyland also, given the domestic CV cycle, with the exception of LCVs, MCVs and HCVs obviously struggling, so we would avoid that space. We like Tata Motors. It's been beaten up quite a bit, and this level of stock does look interesting. The other one I think is Maruti, and it's, as we've discussed in the past, it's more of a yen play at this point, and I think if the yen appreciation continues at the way it has been, and some economists globally are saying it could go to 120. So if it does get to that level, I think clearly Maruti has got more upside. So that's what we like within the auto space.
Gautam, for FY13, benchmark indices did precious little. Nifty was up by only 5 points. Sensex was up by about 4.5%. Do you think for FY14, Indian markets eventually will end up the double-digit gains, or it's too early to really predict that?
I think it's too early to predict that. I think we've got too much out there which is beyond the ability to predict, frankly, or forecast. I mean, the election being obviously a big one. But besides this, the general election, you got another 5 to 6 state-level elections in important states like Madhya Pradesh, Rajasthan, Maharashtra. So if you start adding all that up, I think there are a lot of uncertainties between now and the end of the year, end of the fiscal year, should I say. So I think, and of course, not to mention this month, you've got the S&P review. So I think that's another event that's, frankly, beyond our ability to forecast what may happen. I am not that confident that I hope we end up with a double-digit gain, but for the sake of all of us. But the fact is, it's pretty hard to tell at this point.